So when you take a look at the landscape and you're comparing copper, HG, which is a nice uptrend in its own right, tracking along with the equity strength. I like copper. Let's go take a look at that. I like copper. We like gold, but gold has lost its double green status, right? But copper is nice and double green, so this is a buyable market on a pullback. Silver is a buyable market on a pullback, but gold is double yellow. So I'd say just kind of put gold down the list right now, and a really good alternative to looking at playing a long metal right now would be silver. I don't love silver. I think that a lot of folks are interested in silver right now, but when silver decides it doesn't want to act bullish anymore, it will break hearts and possibly even legs on the way down. So what we do is we say, thanks silver for the setup, SI, December SI, and we would look for opportunities in the 26.65, even down to 26.55 on silver, but I will not recommend you guys buy SI. I'll recommend that if we print at that level, have an alert ready and take a look at SLV. Go with the options. What is the option going to do? Option's going to slow the action down because now you've got something that isn't quite as sensitive and leveraged as the futures contract. And here's the thing with an option. Your risk is limited to whatever you paid for the option. That's it. So with my 45 to 60 day guideline, it's pretty easy. Let's go with October 16. That would be the expiration I'm looking for on SLV, October 16. All right, so my trigger is going to be 26.65, 26.55. That's the trigger. Notice I didn't say entry. Trigger in December silver is that, and that becomes then the alert or the catalyst to buy the at the money silver calls 45 to 60 days out. So we're going to now say that's going to be the 16 October. And I'm even going to give you guys here we go, 16 October SLV calls. Which SLV calls? Well, when we get down there, I'll be looking at the 25s. I think the 25s will do us just fine. Now, these do trade in halves and wholes. There's a 50-cent spread. So these trade on the halves, 25, 25 and a half, 26, 26 and a half. So we can be at 24 and a half or 25s. Based on where I think we would pull back, I'm okay with the 25s. That would be at the money. If you want to be slightly in the money, go with the 24 and a half. And I don't think you're going to have, either way, you're fine. If you want to go at 25 or 24 and a half, at or slightly in, totally fine. But and here's really the important part. And if there's an edge that I have in my options trading is this. Use the momentum. As we sell off down to that level, 26.65, it's going to give us a little bit of a heads up as we get down towards 26.50, the major psychological level. You're then going to start bidding on those 25 or 24 and a halves on those calls. And that's how we're going to position ourselves. Now, another thing you guys know I mentioned, I don't want to trade expensive options. Gang, these options right now, which are nowhere near the price level, they're going to be far cheaper than this when what I'm saying, if and when what I'm saying happens. Right now, those 25s are at $2.64. So they're pretty inexpensive. And if you're expecting silver to explode higher again, this is a great way to do it, if you want to do it at all. And we can do something very similar in gold once gold starts looking like a double green uptrend again. So that's how I would play silver. That's how I play silver. Nice double green market.